Welcome back, everyone. We're in the home stretch, but we have lots of great content to come, starting with a ride on the blockchain and a crypto world. Please welcome to the stage internet entrepreneur, angel investor, author, and blogger Jason Calacanis, along with managing director of Comcast Ventures, Gil Beyda, and global markets reporter for CNBC, Seema Mody. Thank you.
Feel free.
Where do you want to sit, Seema?
I think I'm supposed to be over here, so
I'll sit in the middle.
Perfect, there you
join
go.
us. Hello, everyone.
What's up,
All
Miami?
right.
How you doing?
Everyone's good? Had a good lunch? Ready to talk about cryptocurrencies?
Sure.
An industry that is not controversial at all, doesn't pique anyone's interest.
Who here is ready to make $1 billion? Yes.
Who
Okay.
isn't ready?
There's the crowd.
But I think to
Who
your
here
point,
has lost $1 billion?
That's probably a story people don't want to tell. But it's a great place to start the conversation because I think that's what really put Bitcoin and cryptocurrencies on the map is this massive rise that we saw in 2017, Bitcoin getting over 1,200%, getting as far as 20,000 at the end of December of 2017. And this year, of course, it's been a bit more volatile, but it was that appreciation that we saw in price and therefore the mainstream's reaction to this big surge that we saw that really brought up some interesting questions about the outlook and where exactly cryptocurrencies are going to go from here. So Gil, let's start it off with you. Where do you see Bitcoin headed from here? We'll get broader, but first I want to get your thoughts on specifically
So the most
Bitcoin.
educated answer is nobody knows. There is no fundamental utility. There's no existing model that people can use to value it. It is all pure speculation. A lot of folks say, hey, with this blockchain stuff, it's still early innings. Well, I actually think that even before that, we're in the pregame. So anybody here has been to a football game, right? And what happens in the parking lot with barbecues and drinking? There are still no rules, no teams. It is a free-for-all. But the good news is that the core blockchain technology has some real value. And a lot of folks are experimenting with this technology. And it's going to be disruptive to a lot of businesses out there.
Before we get to blockchain, Jason, Bitcoin and cryptocurrencies, are you a bull or bear right now?
Yeah, it's a giant scam right now, largely. And it wasn't always that way when crypto first came out. It was awkward, odd, nonconformist with a lot of technical skill coming up with a really clever idea using a multitude of technologies from encryption to the blockchain to distributed systems. But it obviously got hijacked by a bunch of scammers with this ICO craze. Probably 90% of the ICOs out there will go to zero, majority of them being frauds or incompetent people who deluded themselves into thinking that they weren't selling securities, which the SEC is quickly cleaning up. They don't have much of a tolerance for people pretending that the tokens they're selling are not securities. So we're starting to see that unwinding. How far that unwinding goes is going to be very interesting. There is a non-zero chance that Ethereum gets hit by this ICO roundup. And if that happens, there's a lot of money and a lot of legitimate investors who back that. And they're going to have a lot of explaining to do. And there is no way to put the genie back in the bottle from my legal understanding of this. If you were to sell a security, it wasn't actually a security, or you pretended it wasn't a security, as is the case here, you have to go back to all those investors and offer them their money back, which basically gives them a put option. Either it goes up and I sell it to somebody else, or if it goes down, I get my money back. So it's going to be a mess to clean up, and it's already becoming a mess. When it comes to Bitcoin, it is pretty impressive that it hasn't been hacked, and it's been so resilient. So kudos to the people who built it and the architecture of it. However, the first technology rarely is the lasting one, so I do think that there is a significant chance that Bitcoin gets replaced either by Ethereum or an even better technology, which means it could go to zero. And I know that sounds crazy, but AOL, MySpace, these things tend to unwind and they have a decade or two. So when that happens, it could be violent and it could be very fast. And so if you have made a ton of money in this, I would recommend selling half of your position and buying real estate and Netflix and Amazon and companies that will be here in 10, 20 years.
Okay.
If you look at the ICO space specifically, as an angel investor, my job is to take risk and invest in those companies, 90% were scams. Now, of the last 10%, 70 or 80% of those, just like startups, will fail, which means if you invested in that space, you have a 3% chance of either making your money back or making a profit. Whereas if you were angel investing, you'd have roughly a 30% chance of breaking even or making a profit, in my experience, maybe 20%, depending on what beach you're surfing, what pond you're fishing in. And so I'm looking now, as this thing collapses, at what companies in the ICO space actually deliver a product. Because if you ask people, what ICO'd product have you used in the last week, nobody has an answer. Some people might say Steemit, which is kind of like Reddit, it's clever. It uses cryptocurrency. Some people might say the Brave browser, which is very clever. So I'm watching like projects like that, and I'm thinking, if they make it out of this Armageddon, they're going to be pretty strong companies. So there may be an Amazon in there, but if you invested, as you know, Seema, like in Amazon in year 1, 5, 10, or 15, you did great. Same thing with Netflix or Google.
Depends on when you sold, but yeah.
You don't want to sell those companies. Those companies will be amazing companies for the rest of our lives.
Let's see, we're in the middle of earnings season right now. On that point, I want to know how many people own Bitcoin, even if it's $5, $200, $300, yeah. So a significant number of people have Bitcoin despite the big volatility that we saw. Gil, there has been this larger idea that despite all the scams and hacks that we've seen that have taken place in the broader cryptocurrency space, the idea of digitalizing physical currency. I tried to live on Bitcoin for a week and found it to be extremely difficult and challenging, given that it's just not being accepted at a wide range of vendors yet, right? But the idea of Bitcoin disrupting the dollar, will that happen?
No, the dollar has too many advantages, and too many governments have a stake in the US dollar, the euro, and other major foreign currencies. So it won't, but it can still have a place in being a purely digital currency. If you look at, as an example, the developing world, they leapfrogged landlines and went directly to mobile phones. I think here, with digital currency, they have an opportunity to leapfrog central banks and create these decentralized economies with currencies that maybe are approved by their governments or not, and allow them to exchange goods and services for these digital currencies, and they'll be at pace with the developed world when it comes to banking and transactions and digital currencies. We already have a well-developed financial system. We trust our banks. We have stock exchanges. We have a central bank that is trustworthy and all. So we have credit cards. So we don't have those same issues. So it's unlikely to have as drastic impact here in let's say the U.S. or Europe.
Jason?
Yeah, when I was younger and I was starting in the internet industry in the 90s, we were quite delusional and we thought, God, you can't stop all this, the BitTorrent stuff. And then when we grew up, we realized, gosh, the governments do have power, like guns and jails and cops and the FBI. And so this crypto dream that the crypto kids have that it can't be stopped is so fantastically naive. I find it charming because literally people in China are being put in jail for selling VPNs. And people have gone to jail here in our country for doing things like stealing the Wolverine movie and putting it up on BitTorrent. The idea that because technically it's hard to stop, that it can't be stopped is ridiculous. So if you have that belief as a crypto person, you got to put that one aside and realize that a government is not going to give up their control of a currency. And the majority of people, the one thing that has not gotten better in the world over the last couple of decades is the spread of democracy. It's kind of flatlined, unfortunately, and our country might be joining the dark side, it seems, when Trump changes term limits to 4. Could happen. And so this idea that South Korea or China or Japan or Venezuela is going to let their citizens trade and give up their currency is ridiculous.
Well, in Venezuela tried that, the Petra.
If the government does it, fine, but you're not going to see, like the United States, give up their military or their currency. And the currency is obviously as important as the military. And if you look at the fourth quarter, which you referred to with cryptocurrencies and the boom, when we went up to 19,000 for Bitcoin, that was driven largely by my understanding of Japan and Korea. And the run-up of Bitcoin from 300 to 1,000 was done by manipulation. So the two big booms were done either by manipulation or a bunch of people who've never been able to buy securities or gamble legally, having the ability to gamble in an unregulated global market. And I think those countries are now in a really difficult prisoner's dilemma. If the South Korean government tries to stop the citizens from investing, the citizens are going to vote them out of office. If they don't stop them, the citizens are going to lose all their money buying ICOs that are garbage, shit coins as they call them. It's going to be very interesting to see how this plays out. And I think Ethereum will be the big test case here, because that was clearly a security. So to pretend it's not a security when everybody buying it is buying it so that it appreciates in value, but then you fall back on this, but it's a Chuck E. Cheese token and people are buying it to play skee ball. And it's like, no, if you ask 100 people who bought it, 98 or 99 of them will say, we bought this because we wanted to have it appreciate like a stock. And so if it quacks like a duck and it walks like a duck, those people are going to get round up.
There was a lot of people who said they're going to buy it because we believe in the underlying technology that is either the open source Ethereum platform or blockchain itself. Is that a bad way to invest or bad thesis to use?
What I tell people who are investing either in startups or in crypto is invest a lot of your time and invest a small amount of your money. And once you have some amount of knowledge, dexterity, and an unfair competitive advantage versus everybody else, so look to the left, look to the right, at the people in the row, and if you know more than them about crypto and the projects and the code bases, and you're on GitHub and you understand how many commits are going in, yeah, you should be trading more. And if you don't, and the other people next to you are smarter, then you should not invest a lot of your money. You want to have a competitive advantage. And I don't think that most people investing in cryptocurrency are checking the repos to see what code is getting pushed. Because if they were, they would realize all of these ICOs are not pushing any code. There's nobody working on the projects.
Meaningful advice there. Gil, what else would you advise individuals in the audience who want to get exposure to the space, but also want to be careful with their money?
One of the big problems that we have, and we're at Comcast Ventures, we are professional investors. So we invest in companies that have revenue, that don't have revenue, are pre-product, have a product. So we invest super early at the seed stage, and then at, to the later stage pre-IPO. And so we do it for a living. And we're having a huge problem today valuing some of these ICOs, these token-based economies. We're fine paying $100 million valuation for a company that has customers and revenue and has a product. We know how to value that company. $100 million for a couple great guys and a white paper, we have a lot of difficulty in understanding that. Now, we might be wrong. If we look at sort of the 90s, before we were valuing companies based upon discounted cash flows. And then came the late 90s and 2000s where companies were amassing eyeballs, audiences, and we said, okay, we need a new valuation method that's not cash flow based, but is based upon people and attention, right? We might be in a new phase, which is we're now valuing economies. A country has just emerged, and now a token is being issued to operate this economy. And then there will be buyers and sellers, and there will be applications and merchants that are built on top of it. I don't know that 100 million or a billion is the right or wrong number. I'm just having trouble understanding the mechanics of how we get the business, launch it, get it to that level so that the economy then starts taking off, and then you can backfill that valuation.
So valuations look suspect. One point you did hit on, which is ICOs, initial coin offerings, that many business owners in the audience today, and of course we've seen a lot of excitement around this new controversial way of fundraising, but many say that it's not as capital intensive or timely as an IPO. So should companies here, business owners here, be actively look to the ICO route to raise funds?
Probably not. ICO is
Why?
So ICOs are very special purpose vehicles to attract investment in exchange for a token. Some would say that's an investment token, but a token that has some utility, some purpose. You're creating this economy around your business. It's not, hey, I have a laundromat and now I want to ICO so I can get capital, and I'm going to allow people to have their laundry done with these tokens. That's probably a misuse of a token-based economy. There are a lot of companies that are trying to retrofit their business. I think it's more appropriate for businesses that are open, that if you look at blockchain in general, has three main principles. One is identity. The second is a immutable transaction ledger. And then the third is decentralized mechanism for decision-making and creating transactions, right?
Are VCs scared? Are they fearful of an ICO? Because in a way, it democratizes the fundraising model. It takes you out of the equation, allows everyone to invest.
I am so scared of the ICOs that I will not hit another
Nightmares?
unicorn. No, it's a joke. The people who are pursuing ICOs, largely, the founders I meet, are ones who do not have product market fit. They can't get their core business to work. They don't have a product that's delighting customers. And they can't clear market based on their team or a product or their MVP with real investors. In other words, Silicon Valley, angel investors, venture capitalists, syndicates, AngelList, Republic, Seed Invest, whatever. And because they can't clear market, nor can they build a product that consumers love, because they don't have the skill to do that, they distract themselves by doing an ICO, which takes 6 months to a year, and which, when those people lose their money, they will sue you, and you will be banned from trading securities or raising money or IPOing in the future. It's a complete and utter disaster. Don't do it. And the people who have done it regret it. I have a number of portfolio companies that have done it, and they all report back to me the same thing, which is, okay, we raised $3 or $4 million off the cap table. Now if this token doesn't work, we have two different securities inside the company. We have the equity that the VCs and angels and syndicates bought, and now we have tokens. If the tokens and the equity in the company are not going to be perfectly in sync, they're two different securities trading in the same ecosystem. So if the tokens go down and the equity goes up, you're going to get sued by this group of people. And if the reverse happens, the VCs and the investors are going to sue you and say, you took all the value of the company and put it in the tokens. And so then you have to give warrants to the investors and say, hey, I'm going to give you a little bit of extra tokens, and I'm going to give you tokens at 50% off, and the suckers on the street are going to buy it for $2, and we're going to give it to you for 50 cents, whatever it is. And all you're doing is wasting your time. What startups do is they find product market fit, and then they figure out a way to scale it. And they take all of that money they make from scaling and put it back into the product. So whatever great company you look at, Thumbtack, Uber, Wealthfront, Robinhood, DataStax, Desktop Metal, Com.com, all of which I invested in their seed rounds. All of those companies found product market fit, built a delightful product, and just kept scaling it and scaling it and scaling it. And what ICOs do is they just give you a complete distraction from that core fundamental. There is enough to do for founders to get product market fit and to try to scale it. And there's plenty of venture capital, plenty of angel investors, and plenty of syndicates in the world to fund great startups. So the people doing ICOs are largely the distracted folks. And they're going to get themselves sued, and it costs $500,000 to $1 million to do this, only to then get rewarded with lawsuits and the SEC investigating you and getting banned for life. Do not raise money as an ICO if you're a real founder with a real company with real products. If you are not capable of building a real product and you've got nothing else going on in your life and you want to risk going to jail and getting sued, by all means, write a white paper, scam a bunch of people around the world who you don't know into sending you their tokens for your tokens, but it will end in tears, and it's already ending in tears. They're going to be putting people in jail. They're already arresting people and picking them up at the airports for doing these things. What more evidence do you need than the SEC saying, this is a security? We haven't seen one ICO that's not a security.
And that's where I guess the question is, when will ICOs start getting the green light from the SEC, whether it's their securitized tokens? That seems to be where they're headed.
The rules are all here. The rules are all here. People are choosing
they're getting updated,
to ignore
though.
them.
The SEC is putting out new guidance
And
on initial coin offerings. Is that good or bad, Gil? The fact that more regulation for this industry, good or bad, would you say?
Definitely good. Just 5 seconds on the previous question. ICOs will not put VCs out of business. The least value that we bring to the table is cash. Cash is a commodity. The most value that an ICO brings is cash, right? VCs add a ton of other value in helping your product market fit, helping your go-to-market strategy, hiring your team, all of those things. Money solves one small problem for an early stage company. We bring a whole bunch of other value. We had this same discussion when we were talking about crowdfunding a few years back. Is that going to put VCs out of business? And it hasn't. So getting back to regulation, I think regulation is super important. I think we need a known playing field with known rules. I think once we have that playing field set, professional investors like ourselves will feel much more comfortable going into the space. I think also retail investors, consumers will feel much more comfortable that they're not going to get scammed, that the government is looking out for them. In this case, the government has a purpose here. I think the SEC is sort of in a bind because on the one hand, they want to see where this is going, where these ICOs are going. They don't want to issue regulations too soon and sort of throw the wet towel on it and then have it all of a sudden take off in another country or another region. So they want to see how it's going to play out. But on the other hand, they don't want sort of your grandmother's retirement to be lost. They don't want to see those headlines as well. So I
disagree. I don't think the SEC cares about seeing how this turns out. They are principled people who want to see people play by the rules. And the new regulations are going to be, here are the existing regulations, follow them. And if you want to trade your shares on this blockchain thing, good for you. But follow the existing rules is what their guidelines are. They don't care if this technology takes off or not. That's not true. Their job and their mandate is to strictly enforce the laws they've been handed. They do not have a horse in this race. They don't care.
But you could argue some of their other colleagues in other government agencies, from the CFTC to even the Treasury cares.
I think, if it's a tool that they can deploy that will, provide value, fine. Everybody looks at, the way they're going to look at it is, what are the tools here that could help us run the government or organizations better? But, the idea that we're going to reinterpret securities law, this happens every 10 or 15 years or so. Everybody wants to reinterpret securities laws.
Right.
And we've only had that happen really one time in our lifetimes that I know of, which is the Jobs Act, where you have equity crowdfunding. And to your point, Gil, all that's become is a feeder for venture capitalists. So any hardware product that you want to get venture capital funding for, whether it's Pebble or any number of companies, Canary, other companies, Ring, I think, also launched on a crowdfunding campaign. We just look at that and say, okay, well, there's the first 10,000 customers. Great. You have some product market fit clearly if people will pay you for it in advance. There will be an interesting thing that's going to occur with, I predict, with the concept of accredited investors. So you have accredited investors who make a couple of $100,000 a year, have $1 million in net worth. You have non-accredited civilians, 95% of the country. If you're making under $200,000 a year, that does not mean you're stupid. Okay, there's a professor of economics in this country, and he or she makes $150,000 a year. and they train people for their masters in business and finance, and they're not accredited, even though they teach that. So I think what the SEC will eventually do is make a test where you have to get a certain certification, like a driver's license, that allows you to buy non-traditional securities. And once that happens, that's really the silver lining in the entire crypto space, is that what it shows is there is a global market of people who want to invest in early stage startups and projects so early that they will invest in a white paper with spelling errors in it that they don't even read. I mean, they're like, oh, Uber plus tokens? Oh, Airbnb plus tokens? Great, let's go. Here's $500. And you know what?
Literally received so many pitches on just that.
Just that. It's like, just slap a token on it, just like people slapped mobile or the web or AI onto
How
startups.
many times are you two being pitched on an ICO or the next token?
30 times a day in email.
Yeah.
40 times
Gil?
a day.
Yeah, maybe not that many, but probably 10 or 20 a week.
So how do you filter out, all the noise and find the ones that actually have true value?
A lot of what we do is what we have been doing in venture, which is look at this as a going concern. Is it solving a real problem? Are there real customers? Look at the team. Can this team execute? Can they bring a product to market? Look at the competitive landscape. We do all the same things we would do for a normal business.
I hit reply and I say, tell me about your customers.
It's a good question.
And then they reply, we don't have customers. You're the customer, the person buying the ICO. And I'm like, oh, well, that's very meta.
That is one customer, but not your only customer.
But that's exactly how
it's
a lot of these
customer for the
companies look at
stock.
it.
Right.
I mean, I see it happen in non-ICO companies as well. Some founders get so good at raising money that their job is raising money, and they don't have product market fit. They don't understand their customer base. And no great company has ever been built without delighting and over-servicing their customers to a point of absurdity. And that's the missing piece in these ICOs. And the other thing I say is, are you selling Chuck E. Cheese tokens or are you selling equity in your company? Because I buy the latter as a business, and I buy the latter for business and the former when I take my daughter to Chuck E. Cheese to play skee-ball.
An important differentiation.
Absolutely.
Been on the ground here at Emerge, the conference, over 15,000 people, speaking to a lot of folks, and it is clear that the number one buzzword is overwhelmingly blockchain. Business owners, companies from small to medium size want to know just how blockchain can be applicable to their company or to their industry. Is it a perceived threat or is it an opportunity? So given the investments both of you have made in the blockchain space, putting ICOs and crypto aside for a second, help us understand which specific industries will benefit the most from this new technology that is blockchain. Gil?
And I'm really glad, Seema, that you separated sort of Bitcoin, cryptocurrencies from blockchain. Yes, the underpinning to cryptocurrencies and Bitcoin is blockchain technology, but blockchain technology is so much more. I hate to say this, but if Bitcoin was $10 instead of 10,000, we would still be investing in blockchain technology. We think it's that seminal. If you look at Internet 1.0, it was about connecting people. It was about connecting buyers and sellers, consumers and producers in this wide network across the internet. But one problem it didn't solve was the trust problem. You didn't know who you were transacting with. You didn't know who you were connecting with. And as a result, we had these large aggregators serve that trust purpose. So we have large e-commerce players and large video content distributors, large social networks arise to service this trust problem so that you knew who was on the other side of that connection and you could trust that. Blockchain eliminates the need for these intermediaries. Okay. It creates a trusted platform whereby any two parties can communicate, transact, and in a trusted fashion.
I don't know what we ever did without blockchain. I mean, think about it. Like, nobody's been able to use a credit card this week. Nobody's been able to use PayPal ever. There's nothing in the world works without blockchain. It's overhyped, obviously. It's an interesting technology. It's absolutely fascinating that crypto kitties and every kitty traded is on an immutable blockchain, and we'll always know who traded which digital kitten for another one at what price. I mean, there are very few applications for it, and for those transactions that people really need to document, it could be interesting, but the world is working pretty well without it. And so I think people have gotten a little drunk on it because they've looked at the performance of these ICOs in Bitcoin, and it's largely, people are just a little drunk on it, that they think everything is going to be changed by this immutable blockchain.
Right.
Like that it can't change.
Exactly.
I mean, if Twitter had an immutable blockchain, we'd all be living by the stupidest thing we ever said and couldn't delete, right? I don't think anybody wants that. Nobody wants our email on blockchain. If you were trading art, the thing that's much more interesting than the blockchain is smart contracts. And so the blockchain enables smart contracts and the ability to say, hey, I'm an artist. This is a pitch I got recently, which I almost invested in, and I'm probably going to invest in a company that does something like this. And this is where CryptoKitties is actually kind of prescient. If I was an artist and I was making paintings and I was starting my career, I could say, hey, you can buy these paintings for $500. But if you buy it and you sell it again, I have first right of refusal to buy it back at whatever price somebody's offering, and I have 7 days to make that purchase back. And if you do sell it, I get 20% of whatever the profit is that you have. I get a 20% carry. So if you sell it for $5,500, there's $5,000 in gain. I get another $1,000. You get the $4,000. But I have the chance to buy it from you for $5,500. A lot of people would buy art and say, sure, that seems reasonable. The artist gets to own their work. And then art could not be stolen, and it would be on the blockchain forever, and the smart contract would enable. That's a really creative idea. And those are the things, the smart contracts, that could get very, very interesting. And we have those already in venture capital, where you have something called ROFR, right of first refusal. If somebody in your company wants to sell their shares, the other investors get first shot at it, and first, right of first refusal. These are interesting concepts, but blockchain, largely overhyped. The thing that's very interesting is, distributed technologies. And so I think Facebook and Twitter, if they do get disintermediated, I don't know if people have used this peer-to-peer Twitter, but I started using it. And somebody emailed me like, hey, get on the peer-to-peer Twitter. So I downloaded it. It was very hard to get on. And I said, how do I add you? And they said, oh, I have to send you my hash. And they email me their hash, and I'm cutting and pasting this huge thing. And then I get on it, and they're like, okay, but be very careful, because whatever you say is going to be on the blockchain forever. I said, no fucking way. And they're like, yeah, no, seriously, don't say anything you regret. I said, get the fuck out of here. This is not on the blockchain forever. He's like, no, seriously, everything we're talking about now is on the blockchain forever. And I just thought, okay, is this important in the world? Probably not. But the smart contracts, that's got huge upside. If you could start programming, different trades or different, hey, if the weather is X and commodities are selling at Y, and I want to trade based on this, these could become very interesting things.
So you pointed to art as one real life example of how blockchain can be applied. What other industries can it be applied
Voting.
to?
I mean, if we all vote,
Yeah,
I mean,
okay.
that's an obvious one where, hey, I vote, my fingerprint, my biometric, my signature are all on the blockchain in some digital fashion or pointing to some asset. Obviously, that's something, or testimony, court documents, and stuff you really need to have for anything that's notarized.
Right.
So you think about a notary coming and taking, selling a car and giving you the blue slip, a pink slip, blue slip, what is it? Pink or blue?
slip.
The
Pink slip, I think, yeah.
I don't know, whatever that is. When you sell a car, you have to give the other person, or you're doing a title change on your house. All that stuff is, but the fact is,
you have to rely on humans for that, right? For the most
yeah,
part.
some human, does that. You'll be
Interaction.
doing that with a biometric in the future. Your picture, a little video, boom, it's your.
Another interesting application is in supply chain, where you have a good that starts some far off distant land,
China,
and there are multiple parties handling that good between there and maybe hitting a warehouse here in the U.S. Those are by and large untrusted parties. They have relationships with each other, but they don't trust that they're going to look out for those goods, make sure that they get there on time, that maybe if there are certain climate conditions that need to be
Counterfeiting would be the perfect one.
counterfeiting as well.
Your Fendi bag is your Fendi bag.
They could create a blockchain to record the chain of custody for an item. But for me, it's less about all the different ways that we can reinvent our existing social media or Twitter or what have you using blockchain. I think that's a very small way of looking at the potential for the technology. I'm looking for that killer app that couldn't be done using existing technology. I don't know what that is just yet. I'm waiting to find out, but something that is native, decentralized control, requires this transaction ledger identity that can't be implemented without it. A lot of these applications that we're talking about can be implemented with a database and a web interface. And if that's the case,
but how far are we from that? When are we actually going to see more use cases or companies saying, yes, we use the blockchain to streamline our whole supply chain operating system?
Download the Brave browser. It's pretty neat.
Okay.
The guy from Firefox created this Brave browser, and you have a certain amount of cryptocurrency you can put in it, and then at the end of the month you can say, hey, I want to give $10 to the websites I visited where I turned off the ads, and so you can send a little bit of your cryptocurrency automatically with microtransactions. And microtransactions have been kind of the holy grail of the internet. Oh my God, you're going to read an article and pay a penny, but they create too much cognitive overhead and too much transaction costs. The minimum transaction for doing something like Visa is 50 cents or $1. And so it just doesn't work to give somebody a penny if you got to pay a 50-cent fee, obviously. And so I think that's going to be super compelling, is this microtransactions. And I've been studying that space for a long time. It's never come to fruition, but I think Brave might figure that out. And obviously Steemit is doing something very interesting. So I'd love to see somebody like Reddit or Amazon do a cryptocurrency where, hey, you know, if you vote something up and you were the first person to put this really cool, you found some really great video and you put it on Reddit and everybody voted it up and everybody got enjoyment out of it, everybody can give you a tenth of a penny, but you got $100. Now you could sit there and start making money or, you know, donating that money to charity or something. You have to be very careful with incentives because money is sometimes not a good incentive, but sometimes, you know, many hands make for light work. So you see this with GoFundMe. Like people will do I did a GoFundMe for McCabe after he got fired from the FBI by Trump. I was like, oh yeah, that poor guy. And he wound up raising $500,000 on GoFundMe for his legal defense. It turns out he's a millionaire, so he doesn't need it. But it is quite interesting how, you know, something goes wrong in the world, and everybody's like, you know what, that feels wrong to me. Let's all give $1 or $10 to that person, and you only get 1% of people to do it. But all of a sudden, that person has a $10,000 or a $50,000.
Yeah, it sounds like crowdfunding.
Yeah, that's kind of beautiful and interesting. And I think for startups, that's going to be very powerful. So right now, AngelList, Republic, Seed Invest, and a couple of these sites for syndicates, which is accredited investors in mine, Jason's syndicate. We have 2,400 members. When we send out, we're going to invest in this new company, CafeX. 99 people give $10,000 each, and all of a sudden we've raised $1 million. But it's only $10K per person, so they can afford to lose it. Well, what if it was $1,000 per person? We had 1,000 people, or 10,000 people had $100,
Sure.
or 100,000 people had $1 or $10. Now it gets really interesting because everybody could afford to participate in that, and that's where I think there's going to be some interesting things that occur on a global basis. Because people are moving this money around. They made money in Bitcoin and Ethereum, and they're like, oh, this ICO seems promising. Let me just send $1 or $100 towards that.
Diversify some of their crypto wealth into
That's what they're
these
trying
new
to do.
areas.
I suggest they diversify with one of these houses on the islands over here. Because they're always going to be, well, for the
Real
next
estate
100 years, they'll be worth
is always
something.
an option. Gil, while blockchain has dominated you know, the press and has also been something that really has captivated our attention, it's still one of the harder concepts to understand. So for those who want to learn about blockchain, whether it be coding or even just understanding how it will play a role in their business, where should they go? Is it consensus? Or where does one go to learn blockchain?
That's a good question. It depends on your skill set. If you're non-technical, it's going to be very difficult to pick up blockchain. You'll be able to pick up the concepts of it, but it's so early that you almost have to be a technologist in order to understand the underpinning. That's going to change as we build the core platforms, and then the enablement layer, and then the application layer. It's going to be easier to use, easier to program, easier to understand. But I still think it's, as I mentioned before, it's early, and as Jason said, unless you're willing to get into the details and read some of these white papers, it's going to be difficult to get a grasp on.
I mean, one of the fun things about the internet in the early days was like setting up your internet connection. Some people here are too young to remember, but you had to like put an Ethernet card into your computer and then, get a cable modem or DSL, and you had to put your IP address and your DNS in yourself. None of this stuff just worked. And that's kind of the level we're on right now, is like setting up your browser in the old days, setting up your pipe connection and your DNS yourself, your routers. And so I would suggest just, getting one of these crypto sticks where you can buy and sell and, create a wallet and actually attempt to do it. And you'll see exactly how utterly frustrating it can be.
Where, Coinbase, or what's your?
Well, Coinbase, you're just kind of wiring money and they handle all of that. What I'm saying is like actually create a wallet, maybe create a mining rig and, do a little mining. Like I said earlier, if you really are interested in this, spend 100% or 50% of your time learning and 1% of your net worth until such time as when you sit at the poker table and you look at the 8 opponents, you go, I'm better than those 5, I'm as good as those 3 or those 2, and that one's better than me. You should sit at that poker table. You don't want to sit at a poker table where you're like, those 5 people are better than me, I'm as good as those 2, and I'm the sucker at the table, right? And that's what a lot of people are doing right now, is they're just rushing into this,
right,
and they're the sucker at the table, and
right,
don't want to be that.
You heard it first. Jason is canceling drinks tonight. We're all going home and mining.
Yeah.
So that way, when we're at the poker table and blockchain really evolves, we'll all be.
If you were going to go play poker and
experts.
learn, go play at the $20 tournament, that they have at every casino, where if you play for an hour or two and you lose your $20, you can just say, oh, that was like a $20 or $10 an hour poker instructor teaching me. It's okay to lose the 20 in the name of learning. Don't put 100,000 or 50,000 like people were doing with BitConnect. There's a class action lawsuit against them out of Florida, I think it's Orlando, where the attorney general listed 7 people who lost their money. And I looked at it and it was like 10K, 15K, 20K, 100K, 75K, and I thought to myself, okay, these people lost their money and they're suing with the attorney general. Well, they're not accredited investors then.
Right.
Because accredited investors means they have millions of dollars. They don't give a shit if they lose 10 or 25. They would be embarrassed that they got suckered into it. And they would never join a class action lawsuit. So the people who did, these are not accredited investors who probably put some significant part of their retirement into this stuff. And that's the danger, is like these people scamming people and using FOMA techniques. We're on CNBC all the time. We're not saying, if you buy Netflix today, Reed Hastings not, if you buy Netflix today, you can get it for 50 cents, but tomorrow it's going to be $2.50, and then I'm going to give you 2 for 1 on Thursday. Like, what is this, like a bazaar? Like, that's not how securities are sold. And there's not like a countdown clock. Oh my God, I saw this marketing on Instagram. Countdown clock until you buy your crypto is you have 6 hours left, and then the price goes up. Like, when you see that kind of stuff happening, that's the stuff the SEC gets very concerned with. FOMA marketing plus securities equals disaster.
It also begs the question, Gil, do you think the traditional banks, they've been very skeptical of cryptocurrencies and blockchain, but do you think at the end of the day they will get on board, Goldman Sachs, JP Morgan, Citibank, among others?
Yes, I think they will, because I think that they're looking at it as a new opportunity. When have the banks had new opportunities to be in new businesses, to expand their businesses? Over the past number of years, it's actually been shrinking. Here's an opportunity for them to implement new technology, to look smarter. I don't think the delta value add in the U.S. is going to be that great, because we all have credit cards and debit cards, and we don't care how much the retailer is paying in fees and all. And we have a system, an economy that works. As I mentioned before, I think the real impact is going to be, this technology has the potential to leapfrog underdeveloped countries who have less sophisticated central banks, they're unstable currencies, and they have no means of digital transactions.
Jason, last word?
Yeah, this could be as big for Goldman Sachs as credit default swaps. This could be huge.
Late to the game,
Literally,
though.
no, I mean, that is the one thing that gets me concerned about this. Luckily, it hasn't been a huge amount of money invested. And I think there's a ton of fraud going on, money laundering, and fake transaction volume, which is very easy to do. But luckily, I don't think it's enough money to create a contagion that would crash the economy. But we are now in the longest bull market since World War II, and it's 110 months now that we've been up. It's kind of crazy, and something could rattle the market. Could be, and it could be cryptocurrency where somebody makes a big bet, it goes up for a little while, other people then pile in. You know, if Goldman said, hey, we want to build a $10 billion Bitcoin portfolio and everything goes crazy again, what happens when that unravels and there's no buyers on the other side and those people need money, which is what has been happening for the last couple of months. Is when they sold the Mt. Gox Bitcoin, it led to Bitcoin going down to like 6,000 or something. And so I think the buy side is going away. So we got to be very careful. And I think that's why the SEC is getting super involved right now, is because they actually think the contagion black swan event could be crypto. So it's not a joke to create a global casino where it's anonymous and unregulated, because unintended consequences can happen. And look at the unintended consequences we had in the financial crisis. In a highly regulated market, we had unintended consequences that put us into a huge recession. Imagine what this could do on a global basis.
And that's why this topic gets so much interest. We're going to leave the conversation there. Jason and Gil, thank you for joining us.
Thanks for having me.
Everyone, hope you enjoyed.
Nicely done.
All right, thank you.